Hey, good morning, everybody, and welcome to this live, our Trading Places Live. It is Tuesday, August 18th, 2026. And I'm Tom Boley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be with all of you this morning. Futures overnight down a little bit. Rising tensions in the Middle East. That's kind of what's all over the headlines and all. But I mean, for me, we're kind of in that time of the month where we're past, or time of the quarter really, where we're past most of the big earnings reports. We've already gotten the two inflation reports out for this month. We've seen the jobs report. Both inflation reports pretty good. The jobs report not so good, showing a little bit of weakness. And so I think right now the market's just looking for news, and usually that's not a good thing. And it normally happens about this time of the month. And this time of the month typically is not very strong for stocks. So got a lot of that going on. We got options expiring this week. We got a big event for members tonight. So if you're not already a member, you can sign up for a 30-day trial. I'll show you how you can do that a little bit later. But you can go over to our website at earningsbeats.com and check that out. But we will talk this evening about companies that could be in trouble going into the end of this week. If you recall, last month, we talked about Micron. Actually, I had a member ask me. It was trading at $983, and we had a max pain of $850, 3 days away from max pain Friday, option expiration Friday. It was on Tuesday evening, and the member asked, what are the chances really that Micron's going to go back to $850? And I said, probably not very strong. I mean, that's a $130 drop. That'd be a 15% drop in 3 days. Not usually what I would expect, but I said it's not out of the question. You've got market makers that have financial incentive to take a stock back to a certain level to reduce the amount of payouts that they have. And once that day is gone, or into the early part of the following week, it's over. It's just a short-term market inefficiency that you need to be aware of, especially if you're a trader. And by Friday of that week, Micron dipped into the 840s, completely wiping out as much of the option premium as market makers could possibly wipe out. We've seen it plenty of times before. So what we like to do at earningsbeats.com is manage risk. And one way you manage risk is you have to be aware of the risk that's out there. And in the short term, this can be a very risky week for a lot of stocks. So anyhow, again, later today, we're going to have an event. So if you'd like to join, you can start a free 30-day trial at EarningsBeats and be part of that. All right, let's go ahead and I'm going to jump in here because might as well get this party started here. Got a few things to talk about today. All right, there we go. So first of all, you can see a lot of red on your screen from yesterday. So the Dow Jones Industrial Average down 0.5%. The S&P 500 also down 0.5%. The NASDAQ was actually resilient, was up throughout most of the day yesterday, but did sell off in the afternoon, finishing down about 1/3%. You had mid caps down 1/4%, small caps down almost 0.5%. Transports up slightly, but that was really the only thing you see here that's green, other than the volatility index. The volatility index jumping up 6%, and that's not unusual when you see the market selling off like we did yesterday. So still, overall, the volatility index, and I'll show you a chart on the VIX in just a little bit. I like the fact that the VIX came back down and set a new low. I think we had the lowest level we've seen on the VIX since back in January of 2026 at the most recent S&P 500 high late last week. So overall, I mean, I think the market, looks pretty good, but we do have some issues. And so we're going to talk a little bit about those issues today. We're going to talk even more on Saturday. We got a big event coming up on Saturday, and this is a free event. You don't have to be a member. Again, I'll show you that in just a few minutes, how you can register for that. But that will be Saturday morning at 10 a.m. Eastern. Free live stream event. So you can come join us. Again, I'll show you how you can do that in just a couple minutes. Looking at some of the areas that did well yesterday, A lot of the semiconductors, it was last Wednesday at our live trading room, I was telling members, I thought the semiconductors were looking a lot better. We were starting to see more and more of these companies break back up above key moving averages. That's always a good sign when you're downtrending. A lot of times you fail at moving averages and then you go to a new low. When you break through moving averages, it starts to give much more of a feel of sideways consolidation as opposed to downright selling and a downtrend. So overall, I feel better that some of these key areas in the market, especially semiconductors, have begun to show some strength again. Other areas within technology doing the same. I think right now, I would say that there are only two sectors, in my opinion, that are continuing to show consistent relative strength. One's technology and the other's energy. And I trust technology more simply because I believe energy is going to go up and down based on whatever is happening in the Middle East. And we know how volatile the tensions in the Middle East can be. So you think you've got an uptrend. Next thing you know, there's word that there might be a deal in the Strait of Hormuz. And all of a sudden, everything gets flipped in the energy trade. And then you think, okay, well, it's down now for a couple of days. I'll go ahead and take my profits. The next thing you know, energy is right back up again. So it's a very, very volatile area, but it has been one that's been pretty consistent in terms of producing relative strength. But technology has been the undisputed leader for the last couple of years. And honestly, if you look at the history of secular bull markets, it's usually the aggressive areas like technology that lead. So it's not surprising at all. Anyway, futures are down though this morning. I know a lot of these semiconductors were looking, to start off a lot lower. So we'll see whether or not, if they have moved back up above some key moving averages. Now we'll see whether or not they can hold those on the way back down. Looking at the sectors, those are the two areas that were up yesterday. I just mentioned energy and technology. And I meant that not just from yesterday, but really if you look over the last few weeks. It's been technology and energy. If you look at the scooter scores, if I sort this in terms of the scooters, and that's the stock chart's technical rank. So it's a relative strength ranking that was developed by John Murphy. And it's measuring, ETFs against ETFs, small caps against small caps. It's looking at the same asset class. And you can look in chart school at stock charts and go in and get a definition. But essentially, it's looking at the last 5 months and comparing how strong a particular asset or asset class, an asset, index, a sector, a stock, whatever, how that particular security is trading relative to its peer group or to its asset class. And so the ranking system is from basically 99.9 down to 0.1. So if you're at 99, you are clearly one of the leaders. If you're down at 0, you're one of the major laggards. Anyway, looking at the ETFs, you can see technology sitting at 97.6, energy 94.1. So these two are clearly the leaders. The next one is a pretty big drop off down to financials at 65. So technology and energy, if you're trading short term, these are the two areas that have been performing the best. Financials haven't done bad. Healthcare's not done bad. Industrials haven't been bad. But again, if you're looking on a relative basis, because technology's been so strong, it makes it very difficult for other areas to outperform. The pie is only so big, the S&P 500 pie. Technology is a big part of it. When that group is outperforming, it doesn't really leave room for much else to outperform, especially if technology is outperforming by a wide margin. And it has been. Let's see, last week, technology sitting in the third spot, energy's in the first spot. 1 month, energy's first at 8.5%, technology second at 8.39. And then you can see the drop off. 3.85 would be next, industrials, looking out over the last 30 days. So again, energy and technology is where we have seen strength. So if you're trading momentum, these are two of the areas I'd be looking at. All right, S&P 500. Actually, before we get into this, let's take a look at some of these pre-market. So let's take a look at the diamonds, which tracks the Dow. Just down fractionally. It's not too bad. And things may have improved, by the way. I hadn't looked for about 30 minutes. Spider down about 4/10, almost a half 1%. The QQQ was the big one that's down 1.3%. Much of that is in the semiconductor area. So if we pull up the stocks, down 3.88%. It gained 1.5% yesterday. This is one of those charts where it was beaten down, but you can see over the last 3-4 weeks, we've been rallying back, got back up above the 20-day moving average, battling the 50-day moving average. Well, now today it's going to get tested back to the downside. It's going to be trading down closer to that 20-day moving average. Small cap IWM, that's at or down roughly about 1/3 of 1% so far this morning. So doesn't look like we're going to get off to a very good start. So if we go back down, we look at the S&P 500, and I actually, before we do that, let's go back here. I want to show you a couple of these semiconductors because I know SanDisk was down a lot, $107 at the open, potentially in 19 minutes. We'll see whether or not it holds, but it does look like it's going to open considerably lower, roughly 6%. Stock gained almost 9% yesterday. Another one that's been strong, very strong of late, has been AXTI. Stock was up almost 18% yesterday, jumping from 81 to 95, giving back half of it this morning, back down almost $8. I mean, we probably go across the board, but AMD down almost 4%. Micron down 5%. Applied Materials recently reported down 5%. KLA Corp down 5%. I mean, it just goes on and on and on. ARM down almost 5%. So this isn't specific to one company. These stocks lately have been going up together and down together. We do have leaders, so you want to continue to watch for your leaders out there. I think AEHR has been one that's been doing pretty well. That was down 7% today. Pre-market, it was up almost 9% yesterday. But look at the breakout on AEHR, taking out the high from a couple months ago. Not too many semiconductors are breaking to new highs right now. So if you've got one that set a new 52-week high yesterday or maybe the end of last week, chances are you've got a leader. All right, now let's go back, take a look at the S&P 500, a couple other charts. So here's the S&P. First of all, there's not a whole lot of bad stuff going on. Yeah, we had a rough day yesterday and futures are a little weak today, but we made a breakout trading at an all-time high in the month of August. There's your breakout, clearing the early June high. Broke out above about, I think the high was around 76.10. Broke that, went a couple hundred points higher above 7,800. And now, as far as I'm concerned, we're kind of in a range. I think we're fine short term, pulling back to 76.10. Broken price resistance becomes price support. That's TA 101. I think you've also got a pretty nice level coming up in the rising 20-day moving average, which is at 76.48. So you got 76.10, 76.48 as pretty good support. And we're probably looking at, I don't know, maybe a 30-point drop at the open based on futures right now. That would take us back to about 77.15. Still some downside. Market doesn't go up every day. When it breaks out, a lot of times it goes back and it retests. We got, like I said, there's news out there. You got options expiring. So the August options expire the third Friday of the month. Every month, the monthly options expire the third Friday of the month. This Friday is the 21st. This is the latest that monthly options can expire. Not going to be any later than the 21st. If it's a Friday the 22nd, that's going to be your fourth Friday because the first one would have to be on August 1st. So this is late. This is a late time of the month for options expiration, but it'll be this week. And so anything that's been working up until now, especially if it's heavily traded in options, you want to be really careful with balance of the week. Again, we'll talk about that a lot more later this evening. All right, let's take a look at the NASDAQ. So the NASDAQ 100, we annotate this. The thing I like here, we haven't broken to a new high, but we did clear what I think was fairly significant trend line resistance. I mean, or even like a little channel. Don't have exactly a channel. Probably from there to there would have been pretty close. But anyway, this downtrend seems to have been broken by moving back up above both moving averages. Again, when you're downtrending, I expect failures at the declining 20-day moving average. That's what would happen during a downtrend. When you get back through the 20, it starts to look, I start thinking more about continuation patterns once I get through the 20-day. I'm like, okay, maybe this is a left shoulder, this is a neckline, this is the inverse head. Maybe we're coming back up, and maybe we should be thinking about, I don't know, something like that for maybe a neckline. When I start doing patterns, I usually use black. I have different color schemes, just the way I like to look at things. But this would be your left shoulder. Back up here to put in the left side of the neckline. You go to a lower low, that's the head. Now we could be on our way up to put in the right side of the neckline. And I know we're going to be down today, but you don't have to go straight up. Doesn't have to be every day. We'd come down, hit the 20-day, and then make our way up. Maybe latter part of August, we hit this, and maybe the right shoulder prints in September, which is historically not a very good month. I mean, the NDX dropping, I don't know, a couple thousand points. That could be a potential inverse right shoulder that goes in. But again, that's what I start looking for. That's what I start thinking about once we make breakouts that make it look less likely that we're downtrending. The other thing that makes it look less likely that we're downtrending is the fact that the S&P 500, small caps, the Dow, all of them went to all-time highs. It'd be really unusual to have most of the major indices setting all-time highs while the NASDAQ downtrends. I wouldn't say it's impossible, but it's not very likely. So to me, it's just another reason why I would be looking for some sort of a bullish continuation pattern to form on the NDX. And so that would be one thing that I would be looking for. And we don't know. I mean, this could be like the move up. This could be the move down. We might go all the way back up to test the high, have an equal high. And then in September, we might come down and put in a higher low. We might develop an ascending triangle pattern. So that would look something like, so if we annotate, and again, this is just things that I'm thinking about. I'm not saying this is what the market is going to do. It's just that once we break above moving averages, I start to think more about, hey, maybe this is, some sort of a continuation pattern that is going to extend into the fourth quarter. The fact the fourth quarter is coming only adds to my bullishness because the fourth quarter rarely goes down. But, if we go down and hit the 20-day and we come back up here, and then maybe in September, come down something like this, and then maybe in October, maybe it even lasts into early part of October, I don't know. But then at some point we come back up and do something like that. So what we would have here is, we'll just start up here at the top. So coming across here, we would have our equal highs. And then down here, potentially rising lows. That potentially could be some sort of a ascending triangle. Now, again, I don't know if it's going to be that. I don't know if it's going to be an inverse head and shoulder. I don't know if it's going to be a continuation pattern at all. But these are things I'm looking for to try to help determine where I think the most likely next move is. Now, again, remember from, I think it's October 28th to January 18th, the S&P 500 has gone up like 66 of the last 75 years. It's not 100%, but that's a pretty hefty percentage chance that the market's going to go higher from wherever we are on October 28th to where we are on January 18th. Just those 2 points. I'm not saying it's going up every day in that period. I'm just saying January 18th, the S&P 500 is very likely to be higher than it is on October 28th. 66 of the last 75 years, that's been the case. So I'm looking at all-time high breakouts on the major indices other than the NASDAQ. I'm seeing the NASDAQ moving back up, taking out key moving averages, which starts to look less and less like a downtrend and more like sideways consolidation, some kind of a continuation pattern. We've got the upcoming bullishness in the fourth quarter. That's when I put all these things together and I just think my odds are greater. I'm not trying to say, hey, we don't have problems out there. I'm watching interest rates. I'm watching the inflation numbers that come out. I'm watching, every move by the Fed. I'm watching what's going on in the Middle East. I mean, all these things are out there, but at the same time, I'm not ignoring the chart patterns. I'm not ignoring what price action's telling me, which is pretty darn bullish. And it's not just on a daily chart. Let me pull up the S&P 500 here for you. And let's look at the weekly. So here we had pulled back in March, had a PPO reset. So at that point, there's no momentum in the market. Short-term moving average, long-term moving average are the same. That's why the PPO is at zero. That's what that means. Whatever moving averages you're looking at to create the PPO, the moving averages are the same. The default is what I use, and the default, you can look right up here, PPO, and in parentheses, it says 1226.9. That means it's looking at the 12-period moving average, exponential moving average, the 26-period exponential moving average, and the 9 is the red line, which is just the 9-day moving average, simple moving average of whatever that PPO is. So it's like a lagging, smoothing, if you will, of the PPO. So when the PPO is going down, it's lagging, but it's coming down with it. The PPO turns up, this lags, but then it eventually turns up. So it's kind of like a shadow of the PPO, but it's a lengthy shadow. Anyhow, once we get to the zero line, there's no momentum. So when we start moving up from here, this means the short-term moving average is starting to pull away from the long-term moving average from a zero line. So we now have bullish momentum on this move. And then we broke out. So if you didn't already think we had bullish momentum, that was your confirmation. So we move up, we pull back. What do we do? With the PPO rising at the most recent high, we pull back and we do exactly what I would expect. Bounce off the rising 20 period, in this case, 20-week EMA. And from there, we go up and we set a new high. I don't know that the S&P could look a whole lot better. Small caps, looking at the weekly. Look what happened here as we kept going up. Look at the negative divergence. What do we do? Went all the way back down to the 50-day moving average, down to the PPO center line. Got rid of all the negative divergence. All the momentum issues are over once you hit the zero line. It's telling you there's no more momentum in the market. Your short-term, long-term moving average are the same. Now we start to bounce off of the short term's pulling away again. Now we're building momentum again to the upside. I mean, IWM looks great. This is on the daily chart. We could go to a weekly chart on the IWM. Weekly chart, we didn't quite get down to the center line, but we were getting close. We got very close to the 50-week SMA. And that's really what I look for. I always say I'm looking for a 50-week SMA test and or a PPO centerline test. I like to get both, but if I get one or the other, I'm generally satisfied. Here, got pretty darn close to the 50 period or 50-week SMA test. And then what happens? We break out and we go up and put in a new high. So far, pullbacks have held above the rising 20. The 20 is above the 50. The configuration here is great. Some people will say, well, yeah, but volume's light. Well, go back in history and study history. And when you see all-time highs, most of the time, the volume is lighter on the way up than it is on the way down. That's just kind of a fact. Volatility index. Let's take a look at the VIX. I'm going to pull this up on a little different chart so we get the whole chart in here. There we go. One thing I look for on volatility, and I'm going to go back a few years here. Let's annotate this. One thing that bothers me about volatility is, or the VIX, I should say, the VIX in general is, and we don't show the S&P 500. Actually, I need the S&P 500 on this chart. Let's get rid of the PPO. All right, let's annotate this. So normally what you see is the S&P 500 going up and the VIX, normally VIX going down. Not always, but usually. If you look back toward the end of 2024, remember one of the times I talked about the market potentially having a bear market, cyclical bear market. I was looking for a correction, maybe even possibly a cyclical. Actually, I don't think I said cyclical bear market back then. I was looking for a correction. One thing that was bothering me is that, and there were a lot of things, but this was one. Anytime you get the S&P 500 going up, and during that period, the VIX lows are also going up. Normally, again, when you're setting new highs in the S&P, the VIX should be going down. Here we were going up. So as the S&P went up and set new highs, volatility was higher. Market makers were pricing options more expensively, which is unusual. I mean, look at as we went up in later in 2025, as we're going up, what are we doing here? Going down. And then as we neared the top up here, what happened? As we went up here, well, at least for a little while, we were seeing the volatility rise. And even if we shorten this, just these last few highs right here, take a look at what was happening to the VIX. So the VIX was starting to rise again right at that peak. The VIX was much higher at this peak. I mean, could probably go on and on. I mean, some of these others, I mean, not all of them resulted in big sell-offs, but generally, to me, it increases the risk. And that's really what I'm looking to try to determine with technical analysis. Now, what we're doing right now as we're breaking out to new highs is we're going down in the VIX, which is what I would expect. That normally leads to more gains if you go back and you study the VIX. So the odds are telling me we're going to go higher. I still am a little worried about the time of year. And we're going to talk about some more of these things on Saturday. So if you're interested in taking a look at some of the things that could go wrong in the market, go over to earningsbeats.com. You'll see right here, this is a free live stream event. 4 critical signals, 1 verdict. You can click on that and it'll bring up an area where you can register name and email address. I would strongly suggest you do that. We obviously have a paid service, but we do give away a lot of information, trying to give back to the community. That's why we do these YouTube shows. That's why we do these live stream events from time to time, to highlight some of the things that you need to be thinking about. So this Saturday, 10 a.m., even if you can't make it, if you register, we'll send you a copy of the recording. So you want to register for the event. Name, email address, that's all it takes. Can't make it much easier. Let's talk a little bit about the semiconductors, because we were just talking about them in pre-market. Here's the move they're making. Normally, so at the top, you can see negative divergences. We pulled back. In this case, the center line didn't hold. The 50-day didn't hold. The center line didn't hold. And we kept going down. And look at the failures at the 20-day moving average. Until that breaks, until that changes, in my opinion, you have to respect that downtrend. When I see a stock, an index, ETF, whatever, trending down, failing at declining 20 days and moving to new lows, I don't argue with that. That is, remember, price volume, the combination of price and volume, the technical price action is our primary indicator. Everything else I talk about, whether I'm talking about the VIX, whether I'm talking about the equity only put call ratio, sustainability ratios, all of that is all secondary. Primary is what you're looking at on the chart. When you see failures at moving averages and rolling over and new lows, I don't care what the other signals could be saying, hey, it's probably not going to last, but I still respect it until I see confirmation. Confirmation, in my view, is getting back up through that moving average, closing back up above it, preferably with some gusto or doing it multiple times. I think at this point, we've now done it 8 or 9 times. I think, it's starting to look a lot more like the downtrend is over. But today we're looking at, and we just opened, you can see we just opened down at the 20-day, maybe just slightly below. No, actually, it looks like we're right at the 20-day, maybe just slightly above right now. This is going to be a pretty good test for the market, especially with options expiring this Friday. So those are some things to kind of be mulling around, thinking about. I still think the market's going higher. I do know that we've got September to get through, and this is the only calendar month. September is the only calendar month since 1950 where the S&P 500 has gone down more than it's gone up. I think when I looked at it, the odds of any other month going up, I want to say it's like 67%. I could be wrong. But in September, the odds of September going up is like 45%. So September's definitely a month that we need to keep on our radar and just understand the history of the market, because I do think that history repeats itself. But doesn't mean it's every year. Doesn't mean because September's down 45% of the time that we're going to crash. Or that's down 55% of the time, I should say. It's gone up 45% of the months of September's. So, I mean, it's almost a 50-50 shot that will go higher. But there is more of a tendency in September to go lower than other months. So we got to kind of keep that in the back of our mind as well. So let's watch semiconductors. I think this is going to be a big area to watch today, because if this fails and starts to roll over and sell off, then I think the recent low comes back into play. I don't know, like where I'm going to just do this last thing. If we draw a line from the recent low, the 2 key lows, and I grab that, go to the highs. I mean, you can kind of see this potential channel that's in play would take us, I mean, as long as we stay below 570 or so, you could use this channel. If you're more bearish, if you're leaning bearishly on semiconductors, this is maybe something to watch. If we can get back up and break through the high we just saw yesterday, especially getting up through 570, it's going to really start to argue more and more and more for bullish conclusions down the road. All right, that is all I have. So let's go in real quick and just see, first of all, everything's down. NASDAQ's down 1.25%. We've got S&P 600, small cap, mid cap. Everything seems to be down. VIX is up about 4%. Last thing, look at these sectors. So we got energy on top, technology down below, and surely a lot of it has to do with semis, electrical components and equipment, electronic equipment. These are all 3 areas. Look at the scooter scores. So if we rank these by scooter scores, the highest groups are down right now. Keep in mind, and I say this a lot, option expiration week, if you're a Seinfeld fan, this to me is opposite George week. Whatever was working before, a lot of times during option expiration week, as you move into option expiration week, can struggle significantly because of all the options that are in play going into the end of this week. Anyhow, have a great rest of your day, everybody. Again, come join us over at Earnings Beats right here, or actually right here. You can start your no-cost trial. We'd love to see you. Please give us a thumbs up, a like on the video today, and subscribe to our channel. That will help us with our algorithms on YouTube. Appreciate everybody tuning in. Have a great rest of your day. Take care and happy trading.